Welcome to the Crypto Breakdown Show, your trusted guide through the ever-evolving world of digital assets. Each week, we break down the latest market moves, industry trends, and major news shaping the future of crypto. Just a reminder, this is not financial advice. We're here to share news, insights, and updates to help you stay informed and ahead of the curve. Let's dive in. This week was all about the bulls charging ahead. Bitcoin and Ether both caught some serious bids on Friday afternoon, climbing to three-week highs. It looks like traders are positioning themselves for what many expect to be the first Fed rate cut in a year next week. This is a classic by the rumor scenario, and it's lifting the entire market. Speaking of lifting, Gemini's stock absolutely exploded after its IPO, jumping a whopping 45% in early trading. The Winklevoss twins exchange sold 15.2 million shares and raised $425 million, valuing the company at over $3 billion. That's a massive vote of confidence from Wall Street. And hey, Wall Street is not just playing with the big boys. The talk of the town is Solana. The token rallied hard this week, with Galaxy Digital CEO Mike Novogratz calling it tailor-made for financial markets. One analyst even threw out a wild technical target of $1,314. Now, that's a bold prediction. But institutional action is undeniable. Galaxy was seen scooping up over $700 million worth of Solana from exchanges, a move that's got everyone talking. It wasn't just Solana. Other tokens are getting some love. HBAR saw heightened institutional activity amid ETF hopes, while Dogecoin rallied 6% ahead of an anticipated ETF launch, with one company, Clean Core Solutions, aiming to amass a $1 billion Dogecoin treasury. Even XLM is holding its ground against a new payment sector rival. All signs point to institutions expanding their crypto plays beyond just Bitcoin and Ether, which is a huge signal for the entire space. Now, let us take a look at the movers and shakers in policy and Web3. It wasn't all about price action this week. A lot was happening behind the scenes. First up, a big one. Tether just unveiled a new stablecoin USAT for the US market. This token is designed to meet US stablecoin issuance standards, with support from heavy hitters like Anchorage Digital and Cantor Fitzgerald. This move shows the growing push for regulatory clarity, even as the regulatory waters get a little murky. Case in point, the Massachusetts State Attorney General is alleging that prediction platform Kalshare is violating sports gambling laws. It's a fascinating legal challenge that highlights the fine line between prediction markets and traditional sports betting. And speaking of prediction markets, Poly Market is making headlines. The platform is reportedly weighing a massive $9 billion valuation, a huge jump from its $1 billion valuation just back in June. It's not all rainbows and sunshine, though. They're working to address some of the same regulatory questions. In a smart move, Poly Market is connecting to Chainlink to cut down on tampering risks for price bets, showing how protocols are stepping up to build trust. On the policy front, there's a lot of hope that a market structure bill could finally be passed by the end of the year. French Hill, often called the father of crypto bills, says that pending legislation should tweak earlier stablecoin efforts. It's a sign that lawmakers are working together to get something done. With all this happening, it's clear that the crypto market is maturing not just in price, but in its infrastructure and its relationship with regulators. We're still early, but we're moving fast. That wraps up this week's edition of Crypto Breakdown. Whether the market's pumping, dumping, or just drifting sideways, we're here to help you navigate it all. If you found today's episode helpful, please be sure to like, subscribe, and share this podcast with a friend. It's the best way to help us grow and keep delivering quality content. Thanks for tuning in. Until next time.